welcome to another edition of our weekend business program, Capital Market Live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's begin with a review of some of the major global stock markets' performance on Friday. Major equity markets around the world ended the first trading week of October deep in the red, capping a volatile start for the month as global investors reacted to the latest jobs report from the United States. On Wall Street, the Dow Jones Industrial Average fell 2.1%. The S&P 500 lost 2.8%, while the Nasdaq Composite slid 3.8%, which is less than 1% above its low of the year. It's a similar picture in Europe as stocks closed sharply lower. Earlier yesterday, the UK's FTSE 100 slipped by 0.09%. The German DAX index dipped by 1.59%, while France's CAC index dropped 1.17%. For the markets across Asia-Pacific, they also ended negative across board. In Japan, the Nikkei 225 dropped 0.71%. Hong Kong's Hang Seng Index fell by 1.51%, while China's Shanghai Composite Index lost about 0.55%. Friday's payrolls report showed the U.S. economy added 263,000 jobs in September, slightly below economists' forecast of 275,000. However, the unemployment rate slid to 3.5%. from 3.7% in August, signaling a strengthening jobs market. And back home, activities at the unlisted securities market ended the third week of September in negative territory after the NASD OTC exchange security index recorded a 1.06% decline. At the same time, the market capitalization fell by 10.27 billion naira to close the week at 968 billion naira, while year-to-date returns reduced by 2%. However, the total value of securities traded during the week increased by 76.06% as the market recorded a total of 92.99 million naira in value against 52.81 million naira recorded in the previous week. At the same time, total volume of securities traded on the exchange rose by 24.07% week on week to 571,164 units, while the number of trades dropped by 22% to 50 this week. Meanwhile, Afriland Properties tops the list of 5 gainers with a 2.46% increase on its price. Friesland Wamco leads 3 other decliners, down by 6.22%, while the double one PLC formula known as Mobile was the most traded security on the NASD OTC market this week. Meanwhile, at the domestic stock market, it ended the first trading week of October deep in red as the benchmark index plunged by 3.41% to close below the 48,000 psychological point there. At the same time, the market capitalization decreased by over 800 billion naira within the week to close below the 26 trillion naira mark. This was largely due to a single-day 3.23% loss recorded on Thursday, which was largely driven by profit taken on Airtel's share price. The loss, which dominated 3 out of 4 trading sessions, affected all the 5 key sectors of the NGX, particularly the banking sector index, which dipped by 3.37% amid intense sell pressure by investors. Multiverse led a pack of 10 other gainers with nearly 22% increase on its share price. Ascom tops 45 other losers, while the trio of GTCO, Sterling, and Zenith Bank were major contributors to more than 586 million total volume shares traded this week. All right, let's bring in Professor Uche Waleke now, Professor of Capital Market, Nasarawa State University, and President Capital Market Academics in Nigeria. Great to have you on the program.
Thanks very much, Ladi.
So it looks like the bearish sentiment still persists in the equities market. How would you assess the third quarter performance so far?
Well, third quarter performance has been in the red, and the trend actually began in June. If you recall, in June, the all-share index fell. And since then, it's been negative performance all through the months. In July, we recorded negative performance. The stock market also tanked in August, and we also saw a depreciation in the value of stocks for the month of September. And that's not surprising. It shouldn't come as a surprise. number one, considering the macroeconomic environment, which in my view is what is really, plummeting stock prices. And this has come despite the some favorable, corporate actions, corporate results, we saw at the end of, September, and even at the end of June, half-year results. So the unfavorable macro environment is what is largely responsible, and by that I mean the high inflation rates, rising inflation rates we've had. As at last time I checked, I think that was on Thursday, year-to-date return has moderated down to as low as 10.67%. And if you look at where inflation rate is today, the latest figure we have speaks of 20.52%. So what that means is that as far as returns from the stock market are concerned, we are having real negative returns, and it's widening by the day as stock market returns go down. So high inflation rate is one. The exchange rate issue is also there, and perhaps more importantly, a major driver has to do with the rising interest rates. We also see, or if you like, the rising yields in the fixed income market. Again, partly on account of the change in stance in monetary policy by the Central Bank of Nigeria. We saw that in the month of July, the Central Bank increased the monetary policy rate, and that also happened recently when it was increased again from 14 to 15.5%. So as interest rates as the benchmark rate is increased, you should expect that yields in the fixed income space, will continue to rise. And of course, portfolio managers, fund managers will be revising their portfolio, will be rebalancing portfolio in favor of, fixed income. So that's largely what is driving it. And again, the part of why rates are also rising is the fact that government has been borrowing. The increasing rate of borrowing by the government is also, driving up, interest rates. And what that means, as I said earlier on, is the fact that investors will move from equities to fixed income.
Right.
In the international scene, we also find the hiking rates by the Federal Reserve. So if the Federal Reserve is hiking rates in order to tame inflation in the United States, we expect that that should also result in some capital flow reversals, investments leaving here. And even for those investments that would have come here ordinarily, wouldn't come because on a risk-adjusted basis, returns are higher now in the US. So these are factors that are responsible for what we find. And all right, overall, of course, we are in an uncertain environment. Right. This is an electionary campaign season, and you find a lot of investors will naturally be, be risk averse, will naturally want to sit on the fence until the uncertainty, until the haze, if you like, clears.
All right, Prof. You said that you did mention the year-to-date positive. The number we saw last, about 10% at this point. Do you think the bottom is somewhat close, or should we still, expect more dips in the market?
Yeah. When I appeared on your program, I think a few weeks ago, I made a prediction based on trends. And I said that what we have noticed in pre-election election years, or what I call penultimate election years, is that the second half of a penultimate election year usually ends in the red, in the negative. If you take it from 2002, you notice first half will be positive, second half is usually negative. And the first half of this year, January and to June, we witnessed a 21.3% positive performance. And by my prediction, if previous performances are anything to go by, one should expect that the second half of 2022 will also, experience negative performance. So I expect that if you take the returns between July and December, you are likely to get something in the negative territory. although that may not be sufficient to erase the high positive returns we had January to June. So going forward, I also expect that with increasing hawkish monetary policy stance by the central bank, that the equities market will continue to, take the brunt. But again, you saw what happened yesterday. I think yesterday when the government, the president presented the 2003 appropriation bill before the joint session of the National Assembly, the markets reacted favorably, and that was why, in my view, the market ended on a positive note, on Friday. That
so you think the market liked that the presentation?
Right signal. So we need to also sustain some of these signals to be able to, trigger, some sort of traction in the equities market. Otherwise, you should expect that the bearish trend will continue.
And you feel traders reacted favorably to the budget presentation yesterday?
Yes, I think so, because, as I said, it's sustaining a tradition of early presentation. One implication of that is that it's going to allow the National Assembly enough time to interrogate the proposal. So it is a confidence booster, in my view, that the thing is coming in good time, and that again, by January 1st, we expect to now see implementation of the 2023 budget. So it's positive for the economy, and I think that's also partly why the market responded positively. The market doesn't like uncertainty, and once there is some sort of certainty, investors tend to respond to that.
All right, Prof. We know it's still on a downtrend at this moment, but are there opportunities, in the equities market that, are there quite hidden that, investors should be looking at?
Yes. I always recommend, investors should always remember Uche Waleke's DHL approach in times like this. In times like this, it's not the time to actually panic and sell. The DHL approach stands for diversification, H is for hedging, and L is a longer-term approach. So for investors in the equities market, the best approach is to have a longer-term view. And in terms of diversification, of course, the fund managers know this. This is the time to also ensure that stocks they are investing in, or securities generally, are well diversified. And what that means is identifying those with solid fundamentals. And there are a couple of them now with good fundamentals, despite if you look at their market price to say book value or check some other fundamentals, it gives you an idea that these stocks, yes, have very good potentials, for appreciation. So it is for the investor to identify these stocks, and this is the time to go in and get them. Some of them have gone very, very low, below their 52-week low, and they are also having, relatively speaking, good fundamentals. So that is that should be the strategy, for any investor. So this is one market I see that will always have prospects. Our markets, quite resilient, and I think that a longer-term perspective will be very, very rewarding for any investor.
Right, long-term perspective would keep you sane, in this kind of downtrend. All right, Prof, we'll continue the conversation right after this break. Do stay with us. This is Capital Market. Welcome back. Still watching Capital Market live on Channels Television. Well, one of Nigeria's leading power generation companies, Geragu Power, is listed by introduction its shares on the main board on the Nigerian Exchange Limited, becoming the first GENCO in the country to be quoted on the NGX. In a statement released, the company says it listed a total of 2.5 billion ordinary shares at 100 naira per share under the utility sector and electric power generation subsector of the exchange. The statement adds that the listing of Geragu's shares, which is the second listing this year for the NGX, has added 250 billion naira to the market's overall value while boosting liquidity in the Nigerian capital market and providing opportunities for wealth creation. Speaking on the listing, the company's board chairman, Mr. Femi Otedola, mentioned that the development will ensure that the long-term growth of the company is assured and its benefits passed to its shareholders. On his part, the Chief Executive Officer, NGX, Mr. Timi Popola, commended the company's listing, saying he expects it will encourage other power generation and distribution companies to list their shares on the exchange. All right, now let's bring back now Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Capital Market Academics in Nigeria. Great to have you still stay with us, Professor.
Yeah, thank you very much, Ladi.
All right, so looking at the Geragu Power PLC listing this week was quite an interesting one. Listed about 100 naira. We saw it close about 120 naira. How do you see the listing?
Yeah, Ladi, is a welcome development. Our market is one market that requires more of such. The number of companies listed on the exchange. If you look at the size of our economy and the number of companies we have in Nigeria, that's still very small. Only on Monday this week, I visited the Dubai Stock Exchange, known as the Dubai Financial Markets. It's an exchange that was established only in the year 2000 and already has over 178 companies listed with market capitalization in excess of $140 billion. Okay, that's Dubai. And if you look at Nigeria, with the number of companies we have, under 160 companies, are listed. And of course, in terms of market cap, it's well far below what I just mentioned now in the case of Dubai. So I think that is a welcome development. As you rightly noted, it has lifted market capitalization by 250 billion naira. And for shareholders of the company, Geragu Power Company, it's a way to create value, for the shareholders. At least now we know the value of Geragu. We know it is 120 naira, per share. And it's also something that will create liquidity for the shares. Remember, it's not being listed by way of, for an IPO for purpose of raising capital. Geragu is not raising new capital. It's only been listed by way of introduction. So it creates liquidity for the already existing shares, of that company. Another thing that it does is that for the company, it enhances visibility of the company, raises the profile of the power company. Of course, that engenders some confidence, even on the part of both foreign and domestic investors. And because we know that the listing is done, following they must have met some conditions, including the requirements to observe corporate governance code. We also expect that there should be improvement in corporate governance for that for the company. And for me, more importantly too, it's a way to diversify the shareholder base of the company, Geragu Power Company. Of course, before you get listed on the main board, there's a requirement that at least 20% of your shares, issue share capital, must be made available to the public and held by no fewer than 300 shareholders. That requirement is there. Even though I see against the company's name, I see BLS. BLS is a compliance listing status, that says below listed, standard. But overall, it is going to enlarge the shareholder base because it provides an opportunity for you and I, for example, if we're interested in taking up shares in Geragu, to buy, shares in those companies. So the market is better for it, and which is also why I think we should continue to find ways to lure other companies, to get listed. The recent move by the exchange to launch a technology board is a very welcome development. A board that is meant to attract tech companies, akin to what we have in the US, the NASDAQ. So if we have a tech board where you will have the likes of the tech companies, the unicorns that we already have in Nigeria, the Flutter Waves, the InterSwitch, the OPE, okay? So if we can have them list on the exchange, including other tech companies, even in Africa, that will go a long way to boost, the market.
Quite interesting.
The other generating power companies in Nigeria too should take a cue. That's why I support the idea of privatizing the entire electricity value chain. Transmission, as we know, is still in the hands of government, but generation and distribution, we are told, have been privatized. So we should get to a point where these companies eventually get listed on the exchange. And I'm happy that NNPC Limited is also planning, by next year, we are told, to get listed on the exchange. That's the way to, build our market. That's the way to also enhance capital formation, via the capital market. So it's a welcome development.
Right. It'd be great to see all those listings soon so that we can see how they actually perform. But I'll take you back to the Geragu share price. Now, listen, at 100 Naira per share, now it traded last at 120 Naira. Do you think that's a fair value for the share price?
Well, we don't have much studies in Nigeria. I have read some studies, that talk about, address the issue of whether, IPOs are overpriced or underpriced. But that's the case of IPO. Geragu is not a case of IPO, listing by introduction, but it's related. When you list a company and you list at 100 Naira, the issue is it the valuation, how right is the valuation? But one thing is clear, whether the valuation is right or wrong, is over or under, or fair, that's the word, fair. The next couple of days or couple of weeks, will reveal that. Usually what happens when a company gets listed like this, the euphoria and excitement, usually shoots it up. See what happened on the day it was listed. That first day, it gained the maximum of 10%, 110 Naira. The following day, it gained 9 Naira, 90 kobo, So you might say it's euphoria, it's excitement. The real value will be revealed, as I said, with time. People have talked about the value not reflecting the company performance, fundamentals and so on. But fundamentally, with time, it will become obvious whether or not the 100 Naira valuation is fair or is mispriced. But I think that given what has happened in the last 2 days, that investors think the price at which it came in, was fair. The 100 Naira price was fair for a company like that with so much potentials.
Right, quite interesting. Well, been trying to see how it trades going forward, even though it actually listed the market when it's actually in the downturn. So it'll be interesting to see how it goes. Thank you so much, Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Capital Market Academics in Nigeria. It was great having you on the program.
Thank you, Ladi. My pleasure.
Thank you. All right, now let's get an outlook for next week. Now, the National Bureau of Statistics is expected to release September inflation data on October 15th. And we see the central bank is also going to conduct primary market auction with 190.89 billion worth of maturities on offer. At the Treasury bill segment of the fixed income market, traders expect the average yield to maintain its uptick amid tight liquidity position. And at the bond market, yields are expected to remain on an uptick as federal government's borrowing plan for full year 2022 and its expected fiscal deficit points towards elevated supply level. And at the equities market, traders and analysts expect the sentiments to remain weak as investors continue to scale down exposure to equities amidst expectations of a continued uptick in fixed income yields. And that's the program today. Thank you so much for watching. I'm Ladi Williams. Bye for now.